So Tim, anyone that's been in the market for more than 2 years, we've seen a fairly substantial growth in the property values over the last couple of years, 20 to 30, even 40%.
Yep.
So there's a fair bit of owners out there now that have got a fair bit of equity. Given the current circumstances, what would you recommend people be doing if they've got that sitting there right now?
Yep. All right. So what we're doing a lot with our clients at the moment is getting a new evaluation done with the bank on their property.
Yep.
If I take a case in point, we had a client that bought a property in the low fours, and they had about 300 grand of borrowing at the time, and that's now increased to 600. All
Nice.
right. So in theory, there's 300 grand there of equity. We can't use all of that equity in borrowing. Usually you can borrow about 80% of a property's value. So in that case there's 180 grand of equity.
Yep.
We can take that equity out. It considers cash in your bank account.
Oh, so you wouldn't wait until you're ready to go and buy another house. You'd be taking that equity out now.
Take it out now. The property's worth 600 now, it might be worth 550 later. So potentially it could be a good strategy to get that equity available now. And then you've got a bigger deposit, a bigger pool there for later to use for stamp duty and deposit for another property.
Yep.
If you're worried that the property market still might be on the recede and you're thinking next year is going to be a better opportunity to buy, you've locked away that equity, it's in your bank account, and next year when you find the property you want, you're going to have a bigger deposit, more money for stamp duty, you're going to lower your chance of having to pay mortgage insurance
smart.
and all those types of things.
And worst comes to worst, it's not costing you anything, because I'm guessing it's sitting in an offset account anyway, so
That's right.
it's just basically sitting there doing what it should be doing,
Yeah.
waiting for that opportunity to come up.
Yeah, so look, the discussion we're having with clients, 12 months time, you change your mind, you don't want to do it anymore, you get rid of it.
Yeah.
It hasn't cost you anything, but it's available.
Yeah, just a bank valuation is basically what it's costing you and a little bit of a loan cost.
Yeah.
So, yeah, if you're in there to purchase another investment property in the next couple of years and you've got equity sitting in there, I'd be recommending talking to Tim now, getting that underway, seeing where you sit, so then you can lock it away.
Yeah.
And then when you're ready to go, you see that perfect investment property come up or that next home,
That's right.
you can just go and buy it because you've got it sitting there rather than having to revalue and potentially being lower than
That's
where
right.
we sit right now.
We can also project future borrowing capacities based on estimated increases in interest rates coming.
Yep.
So, your borrowing capacity today might be higher than in a few months' time, but we can factor that into our numbers. So really, talking to us now, we can set a plan for the next 6, 12, 18 months. But to get started now is a great idea so that we can try and maximise your equity.
Yeah, makes really good advice.